Want to know how to buy your medical marijuana tax-free? Let's talk about it today on Wealth Building Made Simple. We're back with another episode of Wealth Building Made Simple, brought to you by Rife Martin CPA with Allison Rife Martin, the greatest CPA to ever live. What's going on, Allison?
Well, I was going to say the other way you want to know how to buy your way to a good health and medical marijuana, HSAs.
Yeah, yeah.
I mean, I don't know. I
I
feel like
like
this.
it. I like it. I like it. So yeah, but for real, I was sort of joking, but I feel we like if your marijuana is medically
Prescribed. Yes, we
prescribed,
obviously do not advocate recreational use.
yeah, your HSA can buy it, right?
Yeah, I mean, it's a med as long as you're using your funds. I guess we should really say what is a
Yeah,
health savings.
let's start back over. Right? Let's what is a health savings account or an HSA?
So similar to last week where we talked about deferring your wages into a traditional 401k, it is a tax-free deduction and a way to save for medical expenses that you can save for a rainy day. So effectively you can use it for med co-pays. You can use it for um, you know medical procedures. Um, for the most part, the way you are able to participate in an HSA is you have a what they call a high deductible health insurance plan or an HSA eligible insurance plan. So if your company offers an insurance plan that is HSA eligible, absolutely participate because it's a way to defer your income, reduce your taxable income, and save for medical expenses.
So
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 go ahead.
it has to be a plan attached to an employer. You can't get an HSA individually.
You can do it individually, but again, you have to be sure that you're part of a high deductible plan.
Okay.
So like if you, and one other there is this also common misnomer that if your company offers flex spending as opposed and HSA, you can do one or the other, but you can't do both.
Okay.
So that's just a side note, but anyway, so a health savings plan, again, if we just go back to the whole, what is it? It's a way to save for health insurance expense or health and medical expenses and get a tax benefit out of it as well.
Which
And
go
the
ahead. I'm sorry.
HSA also has interest-bearing component into it too. So it grows interest-free or tax-free because there's interest attached to it.
And I think the part that me as a wealth manager and financial planner, I'm glad we're talking about it because it's one of the parts of a plan that I don't really give a lot of attention to, and I should. Um, is because the other benefit, right? So, like a 401k, you get the tax deduction for the money you put into it, and then you get the tax deferral. But the difference with the HSA, as I understand, is like, but if I also spend the money for health related expenses, then I don't have to include it as income, which is different than the 401k because the 401k, when you take it out, it's going to be
Right.
counted as income. This, it's not.
Right. Yes, exactly. So you obviously want to make sure you're only using it for medically related uh, expenses and all. So I couldn't take the money out to go get my hair done, and that would be a taxable event. But if I went to go paid for, you know, a copay or a medical procedure, that absolutely counts as a qualified medical expense, and I don't have to pay tax on the withdrawal or the distribution of the funds.
Got it. And I know we might be going into the weeds, but what if it's like a situation where I have to, so I got an HSA, I put things like, Bitcoin in it and other forward-thinking things, and my HSA grew to like a big number in retirement, and then I needed long-term care services, so I had to reformat my house. With that sort of count, could I call my CPA and be like, "Hey, what's the tax rules on using my $1 million HSA for reformatting my house?"
As in, and am I reformatting my house or reconfiguring it for medical needs?
For
Like,
medical needs, yeah, like
I need bars along the walls to help aid in walking, or any, ramps because I need help walking down the stairs, whatever. Yeah, those would be considered qualified expenses and acceptable expenses again, because you're not putting the bar up for any other purpose other than to help me walk down the hall.
That's good. That's good to know. Yeah, that's a underappreciated because I mean I would probably estimate in retirement on the low end maybe like 20% of the money you're going to spend in retirement might be medical related.
Hmm.
And so incorporating that into your plan, I think is great because you money that comes out tax free if it's spent for that bucket.
Just make sure you keep receipts and make sure you document everything again so that in the event of an audit, you're covered.
Yeah, make sure you keep
So,
your CPA in retirement.
yeah, exactly. Oh my gosh. But again, it's a great benefit. It's just a great benefit that a lot of people don't take advantage of. And again, it's a great way to save for retirement and to make sure or to make sure you have enough funds for medical needs as you get older.
Yeah, yeah, no, this is good. This episode is inspiring me to just talk more about it, bring it back up in conversations, and just say, hey, put some money in it, put it away, um, because you can, yeah, this. I think it's going to be a lot more things medically you can spend your money on in retirement
Right.
in the new age.
Right. I'm with you on that one. So I think it's just a great benefit. And I would, like you say, talk to your financial planner or, CPA or tax preparer to see how you can maximize, and actually to your employer, your HR department at your company, if you're an employee, to see how you can take advantage of this at work too, if it's a benefit that they help offer. Because a lot of times companies will offer contributions to your HSA, assuming again your health insurance plan is HSA eligible.
Yeah. Oh, wait. I'm sorry. One more question. One more question. It's a trend, and I think I know what you're gonna say, but I just want to ask it because if I thought it, somebody else was thinking it. You know how a lot of medical providers are going more to a private pay like model. The
Hmm.
you'll get better quality of service on average in that model because of what health insurance is paying. So if am I able to use my HSA if I get a high deductible plan and then use my HSA and then I pay my medical providers out of my HSA, that those are eligible expenses as well, right?
Because it's a medical necessity. You didn't, it did, the rule, the plan doesn't, I don't, discriminate's not the right word, but they don't discriminate on where you go. It's as long as you're using a medical, going to a medically recognized provider. So obviously you couldn't go to Allison the CPA for medical expenses. You could go to Allison the doctor for medical CPA, and it doesn't matter if I'm private pay or I'm part of a health, covered by a health insurance or, health insurance provider. As long as it's medically required or a medical necessity, of course you could take it out.
Man, I'm loving this. I'm loving this. I'm gonna like open up an HSA ourselves. I'm gonna lobby Congress to allow us to also let that pay for like yoga studios, meditate. I mean that's medical. Like that does better than medicine, you know.
Yep. I
So
was going to say, I think that would be, if there was a way to make it work, I'd love it. Because, I mean, imagine, imagine how much healthier America would be if we could encourage people to go to fitness studios or gyms or wherever.
yeah, yeah, no, definitely. Well, let everybody know how they can reach you if they want to get healthy, stay healthy, and save money in taxes.
You can reach me at my website, rifemartincpa.com, or you can email me at info@rifemartinaccounting.com. And I would love to talk about the 401k, the HSA. I'm trying to think what else ends in A, but anything fun. How can you get an A on your tax return? So anyway, but thank you for another great episode.
I don't know. Thank you.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.